Meta is down over 4% after reporting earnings in this crazy market. The same thing happened with Google, and then Amazon followed after, even before Amazon reported earnings. And it's been a little bit crazy, massive overreaction on a lot of these stocks, but I'm not surprised because most of them have been just on a big run. And most of the run has been because of multiple expansion. I mean, the market expected, pretty, amazing beats from those companies, and they did deliver on those beats. But the market, I mean, the stock has been going up for months. So this is somewhat, justified in my opinion. It was not such a big surprise. But Meta is down over 4%. I decided to review the stock here in the video, talk about the earnings and review them in general, and also give you my fair value and an updated valuation model on Meta stock. Just like Google, I love Google. It's an amazing company, one of the best, in my opinion, of the Magnificent Seven. But my fair value on it is around $107 or a maximum of $110. So even though I loved it at $135, I personally love it much more at a fair value of $110. I don't like to overpay for stocks pretty much. So I'm going to review all that stuff here in this video. And if you look at Meta's earnings, they were not bad at all. I mean, revenue was growing over 23% year over year. EPS grew 168% year over year. The Facebook daily active users, which the market was worried about last year, calling, Facebook dead and TikTok is taking over Instagram and all these kind of things. Well, none of those are playing out, especially in 2023, because they also beat on Facebook daily active users. Pretty amazing stuff. If you look at the family daily active people, meaning all the family apps, the people in general, it's around 3.14, which is much higher than 307, and it has been increasing pretty much every single quarter. This is another thing the market was worried about because it was going flattish in 2022, and they said that it's not going to grow anymore. Well, again, this is not the case. It has been doing pretty well. If you look at expenses as a percentage of revenue, another thing the market was worried about because of the Reality Labs and the metaverse and all these kind of expenses, this has also shifted downward, and now the expenses are lower even than they were in 2021 as a percentage of revenue. They have been coming down every single quarter. So this is also pretty amazing. And as expenses came down, net income has been skyrocketing for Meta, not just in total net income, but also on EPS per share. And this is due to Meta becoming more profitable, but also buying back so much stock in 2022. Zuckerberg bought back over 5.5% of the market cap in 2022, maybe something around $120, $130. Maybe they even bought some shares at around $90 or $95. I mean, that was an amazing, thing Mark Zuckerberg did. And it's just helped the stock a lot. So everything has been going so well. And many of you might be confused of why, Meta is going down. These are amazing numbers, amazing earnings. The stock, has been doing well. Everything is fine. Why is Meta going down? Well, in my opinion, it's going down for a few reasons. And this is mainly on guidance. The first one, they expect higher depreciation expense to increase in 2024 more than 2023. This is not bad at all. But the main one, in my opinion, is more around Reality Labs and CapEx. This is what the market was freaking about in 2022. Reality Labs, they said, we expect operating losses to increase meaningfully year over year due to ongoing, product development. They're still working and developing the products in virtual reality. And we still don't know how this is going to play out, if it's going to be a success or not. And they expect operating losses to increase in 2024, and they also expect CapEx to increase in 2024 between 30 to 35 billion versus 27 to 30 billion for 2023. So this is over a $5 billion increase in CapEx, next year in 2024. So this is why I believe the market is freaking out. It's scared of some kind of a repeat of what happened in 2021 to 2022 when Zuckerberg was going crazy on the metaverse and they're just neglecting expenses and neglecting everything. But this has not been the case so far. He proved himself, in my opinion. Expenses have been coming down. Net income and EPS per share have been going up. A lot of things have improved with the company. I'm seeing much more stability, much more rationality within the company. Yes, maybe the Reality Labs, none of them are going to work out, but we don't know that yet. And in my opinion, it's too early to judge on such, products. I'm sure that whenever they bought Instagram, whenever he did Facebook before it was popular, people doubted it too. But sometimes we just don't know what's going to happen before it happens. So I don't really like to judge whatever is happening, but I believe there's much more discipline within the company. But this is what Zuckerberg is saying in terms of CapEx, and I believe it's waiting on the stock. Another thing that that might be waiting on the stock. And I'm not sure if this is, I mean, if this anything is going to happen with that. This is like 2 days old. And this is over 41 states suing Meta over Instagram claim that they are somehow addictive to kids. And I'm not sure how this is going to play out. I mean, Meta has been sued a lot since it went public over all kind of stuff. So I'm not sure how this is going to play out, but this could be another reason of why Meta has been going down. Now, I did a pretty basic valuation model I'm going to share here in the video. I used 10% revenue growth between 2024 to 2028 over the next 5 years, pretty much 5 year and a quarter. And I think it's pretty fair. The analysts are expecting between 9% to 12%. I put in 10%, and this is, I believe, is a fair number. Net income margin, I used 28%, which I believe could be somewhat conservative because Meta's net income margins, they used to be around 33% before in 2021 and before that, around 33%. And they took a massive hit to around 19.9% in 2022, and 2023 they rebounded to 28%. Now the analysts, they are expecting Meta's net income margins to go back to where they were, around 33%. Now that would be amazing for the stock, and the net income would be much different than my own estimates, so the fair value could be much, much higher. But I don't like to speculate on the best case scenario. I like to mostly use the numbers that I have right now. I mean, if this happens, then it's a plus on my valuation model, but I rather use the 28% net income margin. This is including the stock-based compensation. If you wanted without stock-based compensation, you have to look at GAAP numbers, and you could look at the GAAP EPS versus non-GAAP. We talked about this. Same thing with Enphase. Same thing with a lot of tech companies, SolarEdge, and many others. So I use 28% net income margin. PE ratio, I use 20 times earnings. Now the current PE ratio is around 18.6. The mean was 22, so I put in 20 times. 20 times I believe is fair for a company that's growing 10% every single year with high net income margins. I think 20 times earnings is somewhat fair. I used a 1% buyback yield, meaning if Zuckerberg buys back 1% of the market cap, I don't expect him to buy back 5% at the top right now at this multiple like he did last year. I mean, I would expect 1 to 2% every single year. So I put in 1%. In total, I got 60% on the upside, or 9.9% CAGR over the next 5 years, which is not bad at all. But if I want to double my money with Meta stock over the next 5 years, I would have to buy the stock around $140 per share. And $140 per share is pretty much what it was, somewhere in May of 2023, 22 May, which is, I mean, it's not far from here. I'm not sure if it's going there. But if I was a very long-term investor and I locked in a cost basis of something like $150 or $120, I mean, I would not be selling Meta here just to take profits. This should be a very long-term investment, in my opinion, not financial advice. But if I'm a Meta shareholder, I would want to hold it forever. But if I'm someone that's looking to buy Meta and don't want to overpay, I would personally not be willing to pay more than $240 per share for Meta. So this was my honest assessment on the company. It was not financial advice. Thank you so much for watching the video. I really hope you enjoyed it. So if you did, please press the like button and maybe consider subscribing. So I hope to see you in another video.